Hey traders, welcome back to the channel. In the last video, we explored volume profile and how it helps identify key levels. But today we're diving into another game changer for serious traders. VWAP, or volume weighted average price. If you've ever wondered how institutions track fair value or spot high probability trades with precision, VWAP is the answer. In this video, I'll show you what VWAP is and how it works, how standard deviation bands enhance the VWAP analysis, why VWAP is better than moving averages, and how to combine VWAP with footprint charts and delta for top-tier setups. So if you're serious about leveling up your trading, hit that like button and let's get into it. Now, before we get started, this video is for educational purposes only. I am not a financial advisor, and you should definitely trade at your own risk. Alright, so what is VWAP? VWAP stands for Volume Weighted Average Price. It is a dynamic line that calculates the average price a security has traded throughout the day, adjusted for volume. Unlike simple moving averages that give you equal weight to every price point, VWAP weighs price action based on volume, which means higher volume periods have a bigger influence on VWAP. VWAP resets at the beginning of every session, giving you a fresh look at intraday price movement. It's a favorite among institutional traders because it tells them whether price is moving above or below fair value, helping them identify where they want to enter or exit positions. Now, this is where things get interesting. Let's talk about the standard deviation bands around VWAP. These bands are plotted 1, 2, or even 3 standard deviations from the VWAP line. They showed how far price has strayed from the average, giving you critical insight into market sentiment. Plus 1 SD and minus 1 SD bands represents normal price action. Price tends to revert back to VWAP from these levels. Plus 2 SD and negative 2 SD bands indicates overbought or oversold territory, potentially reversal zones. Plus 3 SD and negative 3 SD bands are extreme deviations. When price hits these zones, expect high probability mean reversion or a continuation if momentum persists. Institutions often use these bands to spot liquidity zones and potential trade setups. Now let's talk about why VWAP is superior to moving averages. Moving averages calculate the average price over a specific period, but they don't account for volume. VWAP, on the other hand, factors in volume, giving you a true reflection of price and participation. Here's why VWAP has the edge. VWAP shows where institutions are positioning themselves. It reacts better to high volume price moves, reducing false signals. Unlike MAs, VWAP resets every session, keeping it relevant to intraday traders. Think of it this way. Moving averages tell you where price has been, but VWAP tells you where price should be based on market participation. Alright, now that we know the power of VWAP and its standard deviation bands, let's talk about trading strategies using these tools. Mean reversion at 1 SD bands. Look for price rejection at plus 1 SD or negative 1 SD and trade back to VWAP. This works best in range-bound or consolidating markets. Breakout continuation beyond 2 SD bands. If price breaks beyond plus 2 SD or negative 2 SD on high volume, it often signals continuation rather than reversal. Wait for a pullback to retest the band before entering. Extreme mean reversion at 3 SD bands. When price hits plus 3 SD or negative 3 SD, it's usually an extreme deviation. Expect a mean reversion back to VWAP. Pro tip, always check order flow on footprint charts to confirm aggressive buyers or sellers before entering a trade. Now, if you want to take your trading to the next level, combine VWAP with footprint charts and cumulative delta for powerful confirmation. Here's how they work together. VWAP shows fair value and key deviation zones. Footprint chart confirms aggressive buying or selling at key VWAP levels. Cumulative delta shows whether buyers or sellers are dominating, helping you anticipate breakouts or reversals. For example, if price is hitting plus 2 SD on VWAP and you see aggressive buying on the footprint chart with a rising cumulative delta, that's a signal to go long with confidence. Alright traders, now before you start trading with VWAP, here's some mistakes to avoid. Ignoring volume at key levels. If price touches a band but volume is weak, it's likely a false signal. Chasing price beyond 3 SD bands. Extreme deviations often snap back. Don't chase runaway moves. Not checking cumulative delta for confirmation. Always Traders validate price action with order flow. If you avoid these mistakes, VWAP becomes one of the most powerful tools in your trading arsenal. Alright traders, now you know how VWAP works and why it's better than moving averages, how to use standard deviation bands for high probability setups, and how to combine VWAP with footprint charts and cumulative delta. Now, if you found this video helpful, smash that like button, subscribe, and drop a comment down below. Do you use VWAP in your trading? Let me know. In the next video, we'll explore how to trade VWAP alongside market profile to identify institutional activity. So stay tuned. Thanks for watching and happy trading.